Imagine waking up tomorrow only to find a massive, rusted iron fence has been built around your neighborhood gas station while you slept. You have the cash, and they have the fuel, but the gate is padlocked, and only one person in the world holds the key to let you in. This isn't just a scene from some dark dystopian movie. It is the aggressive birth of the Donroe Doctrine. This bold new strategy means energy is no longer treated as a simple global commodity, but as a calculated weapon used to lay siege to the entire world. But look at this one number that defines our entire week: $120. That is the projected price of a barrel of oil after the US moved to assert total control over the Western Hemisphere's massive energy reserves. While the headlines focus on geopolitical maps, this specific policy is quietly acting like a vacuum, potentially sucking 4% of your household savings into the gas tank every year. I'll reveal a secret hidden hatch later that big banks use to hide from this chaos, but first, we need to stop the immediate damage.
We aren't going to wait for a total market crash to protect you. Your first immediate firewall is to stop betting on global oil flows and start looking at companies that own the pipes and storage inside our own borders right now. Trimming your exposure to international energy giants right now is like putting a fireproof vest on your portfolio before the sparks from the Donroe Doctrine turn into a full-blown blaze. Protecting your wealth today is about being proactive, not reactive. This matters because in an energy siege, the oil stuck in a tanker 10,000 miles away is worth zero to you. The fuel already sitting in a tank in Texas or Alberta is the only thing that will keep your lights on. By pivoting your energy picks toward regional self-sufficiency now, you aren't just defending your wealth. You're positioning yourself to be the house, not the gambler, in this new energy game. You are choosing stability over global chaos. Taking this defensive step ensures you aren't the last one holding a bag of overpriced energy stocks when the global supply chains finally snap. We want you to be the one who saw the storm coming and moved to higher ground. Now that you've applied first aid to stop the immediate bleeding, we need to open the hood and see exactly what broke the engine of global trade. Let's look at the hidden mechanism driving this siege so you never get trapped again. Let's use some kitchen table economics. Think of the global energy market like a shared neighborhood well. For many decades, everyone on the block shared the water freely. But now, the strongest neighbor has decided that since the well sits on their lawn, they alone decide who gets to drink. It's like when you're at the grocery store and the manager decides to only sell bread to people who live on his specific block. That is the essence of the Donroe Doctrine, turning a shared global resource into a very exclusive local privilege. The hidden mechanism here is geopolitical pressure. When the US restricts how energy flows from places like Venezuela, it creates an artificial shortage that drives prices up everywhere else. Essentially, they are turning off the water tap to cool down their global rivals. But this pressure also makes that same water much more expensive for you, the end consumer. It's a double-edged sword that cools the engine of your enemies while simultaneously heating up the cost of living in your own kitchen. We've seen this movie before. History has a way of repeating itself, and the historical scar of the 1973 oil embargo is the perfect roadmap for what happens when energy becomes a political weapon. It led to massive inflation and changed the global economy forever. We study these patterns at Sketching Finance so you can spot the siege before it hits your wallet. If you want to keep your head cool while the rest of the market panics, hit that subscribe button right now to stay in control. Watch how the drawing changes before your eyes. The old world was a complex web of connections where oil flowed to whoever paid the highest price. It was efficient, globalized, and fragile. Now, those lines are being erased by a new reality. The new world is a series of isolated fortresses. Understanding this shift is vital for your survival, but it is useless without knowing how to play the two very different futures that lie ahead of us. Let's look at what's coming next. We are standing at a fork in the road, where energy prices could either settle into a new, managed normal or ignite a global recession. One path leads to independence, while the other leads to total systemic breakdown. Now that you understand the why, let's look at the what if. We are about to reveal the specific assets that smart money is quietly accumulating while everyone else is just staring at the gas pump in total shock.
So, we stand at a fork in the road. In scenario A, the bull case, the U.S. successfully builds a fortress of energy within the Americas. Our domestic producers and regional allies become the new kings of the energy market. If this happens, we move heavily into American shale and regional pipeline operators. They become the sole suppliers to a captive audience, turning a geopolitical siege into a massive dividend for those who position themselves early. But if the path turns left and the siege causes a global retaliation, we hit scenario B. If supply chains break completely, energy prices will skyrocket worldwide, and the overall global economy will likely freeze in its tracks. If this breaks, we move into defensive assets, meaning we pivot heavily into gold and defense contractors. These are the only sectors that historically thrive when the world is under siege and traditional growth is impossible. While retail investors are panicking over daily gas prices, institutions are quietly moving into real assets. They aren't just buying oil. They are buying the land and alternative fuels like uranium that the energy siege simply cannot touch. The smart money knows that in a siege, the person who owns the source of heat and light always wins. They are buying the foundation of the house, while everyone else is just fighting over the wallpaper. Understanding these scenarios gives you a map, but a map is useless if you don't have a final checklist to take immediate action. You need to know exactly which buttons to press in your brokerage account today. Let's wrap this up with the 3 key moves you need to make right now to ensure your wallet stays heavy, even when the energy world gets light. Preparation is the only difference between profit and loss. Here is your battle plan. First, audit your portfolio for global energy risk today. Second, hedge by moving into domestic infrastructure. Third, watch the $120 mark as your critical signal to pivot into defensive assets. By following this checklist, you aren't just surviving the energy siege, you're mastering it. You are turning a global crisis into a personal opportunity for growth and security, while others are left in the dark. But there is one missing link you need to realize. This energy siege isn't just about the price of crude oil. It is fundamentally about what that oil is actually being traded for in the hidden rooms of power. If the Donroe Doctrine succeeds, it will trigger a currency war that could change the value of every dollar in your bank account forever. This is the next phase of the global power struggle. Why is the price of a gallon of gas linked to the collapse of the petrodollar? We'll sketch that out in our next video. It's a story of debt, power, and the future of your money. Don't get caught off guard by the next phase of the siege. Subscribe to Sketching Finance now, and I'll see you in the next sketch to help you master your financial future.